Are you looking for where to invest your money in 2023? As we step into a new year, it's important to assess our financial goals and think about how best to allocate our investments to reach those goals. With so many options available, it can be difficult to know where to put your money, so in this video, we'll go over some of the best options to consider in 2023. Here's what we'll cover in this video. 1. Investing in the stock market. 2. Real estate investment trusts, REITs. 3. Investing in bonds. 4. Investing in cryptocurrencies. So, if you're ready to invest your money in 2023 for the best return on investment, keep watching for this exciting journey.
Welcome to The Strategist.
Where to invest your money in 2023. Number 1. Investing in the stock market. One of the most popular and well-known investment options is the stock market. Stocks represent ownership in a company and offer the potential for significant returns over the long term. This is achieved through the growth of the company and the dividends it pays to its shareholders. The stock market is a marketplace where stocks or shares of publicly traded companies are bought and sold. When you purchase a stock, you effectively become a part owner of that company, and as the company grows and generates profits, the value of your stock is likely to increase. This can result in a significant return on your investment over the long term. In addition to the potential for capital appreciation, owning stocks in a company also entitles you to receive a portion of the profits in the form of dividends. Companies typically pay dividends to shareholders on a regular basis, usually quarterly or annually. The amount of the dividend is determined by the company's board of directors and is based on the company's profits and its goals for capital allocation. One of the benefits of investing in the stock market is its potential for long-term growth. Historically, the stock market has delivered higher returns than other investment options such as bonds or savings accounts. However, remember that investing in the stock market also comes with greater risk, as the value of your investment can fluctuate significantly based on economic and market conditions. Investing in the stock market can be a great way to build wealth over time, but you need to approach it with a well-diversified investment strategy, a long-term perspective, and a willingness to accept market risk. Investing in the stock market can be done through a brokerage firm, either by working with a financial advisor or by self-directed trading. Working with a financial advisor offers several benefits, including personalized investment advice and a professional who can help guide you through the stock market. However, financial advisors often charge a fee for their services, which can be substantial depending on the firm and the level of service provided. On the other hand, self-directed trading allows you to invest in the stock market on your own, without the assistance of a financial advisor. There are several online platforms, such as Robinhood, E-Trade, or TD Ameritrade, that offer low-cost options for buying and selling stocks. These platforms typically offer a user-friendly interface and easy access to market information, making it simple for individuals to invest in the stock market without professional assistance. When choosing a platform for self-directed trading, it's important to consider the fees, investment options, and the level of customer service and support offered. Some platforms offer commission-free trading, while others may charge fees for certain types of trades or account balances. It's also important to review the investment options available, as some platforms may limit the types of stocks or other investments you can purchase. Whether you choose to work with a financial advisor or self-directed trading, investing in the stock market has the potential to be a lucrative investment over the long term. However, it's important to approach it with caution, carefully considering your investment goals, risk tolerance, and the resources available to you. Number 2. Real estate investment trusts, REITs. Another investment option to consider is real estate investment trusts. These are companies that own and operate income-generating real estate properties, such as apartments, office buildings, and shopping centers. Investors can buy shares in real estate investment trusts, much like they would with stocks, and receive a share of the income generated by the properties. This is a great way to invest in real estate without having to directly own and manage properties yourself. One of the key benefits of investing in real estate investment trusts is the potential for steady, passive income. Real estate investment trusts typically generate income through rent paid by tenants, and a portion of this income is paid out to shareholders in the form of dividends. The dividend yields of real estate investment trusts are often higher than those of other investment options, such as bonds or savings accounts, making them an attractive choice for income-seeking investors. In addition to providing passive income, real estate investment trusts also offer the potential for long-term capital appreciation. As the value of the underlying real estate properties increases over time, the value of your real estate investment trusts is likely to increase as well. When investing in real estate investment trusts, keep in mind that these investments come with some level of market risk. The value of your investment can be affected by changes in the real estate market, such as shifts in demand for certain types of properties or changes in property values. Real estate investment trusts can be a great way to invest in real estate without the hassle of directly owning and managing properties. They offer the potential for steady passive income and long-term capital appreciation, making them an attractive option for many investors. Number 3. Investing in bonds. Bonds are another popular investment option that offers a fixed income over a set period of time. They are essentially loans made to companies or governments, and the investor receives interest payments as the bond matures. Bonds are considered a relatively safe investment, as they offer a set return and are less volatile than stocks. Bonds are debt securities that offer a fixed income over a set period of time. When you purchase a bond, you are essentially lending money to the issuer in exchange for a promise of regular interest payments and the return on your principal investment when the bond matures. One of the key benefits of investing in bonds is their relative stability compared to other investment options, such as stocks. Bonds are considered a relatively safe investment because they offer a set return, regardless of market conditions. This makes them a popular choice for investors looking to diversify their portfolios and reduce their overall investment risk. Another benefit of investing in bonds is the potential for a steady stream of income. Bondholders receive regular interest payments on their investments, making bonds a popular choice for income-seeking investors, such as retirees or those looking for a reliable source of passive income. It's important to note that not all bonds are created equal. The credit quality of the issuer, the length of time until maturity, and the interest rate offered are all factors that can impact the risk and return of a bond investment. Higher credit quality bonds, such as those issued by the U.S. government, are generally considered to be safer investments, while lower credit quality bonds carry a higher level of risk but may offer a higher yield. Bonds can be a valuable addition to any investment portfolio, offering a relatively safe and stable investment option with the potential for a steady stream of income. Number 4. Investing in cryptocurrencies. Cryptocurrencies, such as Bitcoin and Ethereum, have gained popularity in recent years as an investment option. Cryptocurrencies are digital currencies that are decentralized and use encryption techniques to secure transactions. Unlike traditional currencies, cryptocurrencies are not backed by any government or central authority, and their value is determined by supply and demand on the open market. One of the key benefits of investing in cryptocurrencies is the potential for high returns. The value of cryptocurrencies has been known to increase significantly over short periods of time, leading some investors to see them as a way to potentially make a quick profit. However, it's important to keep in mind that cryptocurrencies are considered to be a high-risk investment due to their volatility and lack of regulation. Another unique feature of cryptocurrencies is their decentralized nature. Transactions made using cryptocurrencies are secured by complex encryption techniques and are recorded on a public ledger, known as a blockchain. This creates a level of transparency and security that is not possible with traditional currencies or investment options. Despite their potential benefits, cryptocurrencies also come with a number of risks. The value of cryptocurrencies is highly volatile and can fluctuate rapidly, making them a risky investment option. In addition, cryptocurrencies are not yet widely accepted as a form of payment, meaning that there is limited demand for them, which can impact their value. Cryptocurrencies are not yet regulated by any central authority, which means that there is a higher level of risk associated with investing in them. Investing in cryptocurrencies can be a potentially lucrative investment option, but it's important to approach them with caution. Due to their volatility and lack of regulation, cryptocurrencies are considered a high-risk investment, and it's important to do your research and consult with a financial advisor before making an investment. It's imperative to keep in mind that the value of cryptocurrencies can fluctuate rapidly and that investing in them should only be done as part of a well-diversified investment portfolio. There are many investment options available in 2023, and the best one for you will depend on your financial goals and risk tolerance. Whether you're looking to invest in the stock market, real estate, bonds, or cryptocurrencies, it's important to do your research and understand the potential risks and rewards before making a decision. We hope this video has been helpful in providing you with some options to consider when thinking about where to invest your money in 2023. 2023 offers a variety of investment options to consider. Each investment option has its own unique benefits and risks. Remember, the key to successful investing is to diversify your portfolio and have a long-term investment strategy. Consider investing in a mix of different types of assets, including stocks, bonds, real estate, and commodities, to minimize risk and maximize potential returns. As always, be sure to do your research, consult with a financial advisor, and invest wisely. Thank you for watching, and we'll see you in the next video.